Hi, everybody. Liz Levine with Signature College Counseling. So this week's Tuesday Talks with Liz, we're going to talk about how do federal student loans work. So let's first start by saying there's really two different kinds of federal student loans. And I'm also going to, package in there Parent Plus loans as well, because they're all through the federal government. So there's the federal direct student loan, which is a max of $5,500 for the first year of undergraduate, $6,500 for the second year, and $7,500 for the third and fourth year that you can take. Anybody can qualify for them. The unsubsidized loans. Unsubsidized means that interest will accrue while you're in school. And so they are also not co-signed by a parent. It is truly a student loan. There's also these Parent Plus loans. And what are those? And those are actually loans that can be used for a parent loan. And the parents can borrow up to the cost of attendance, right? Which is a lot of money. You want to be very careful about borrowing any money to understand what the ramifications are for when you have to start paying them back and how much that is and how that's going to fit into your budget. Very, very important. You can watch another video of ours about loans. So there's Parent Plus loans and there's federal direct student loans. They're both through the federal government. The student loans are lower interest. More recently, they've been a little bit above 3%. And then the Parent Plus loans have been at around the 5% range. Congress votes on it every year. So as interest rates rise, so do the interest rates on the student and Parent Plus loans. So let's talk about how do you get these loans? Well, the first thing anybody's going to need to do is fill out that FAFSA, that free application for student aid. That is the federal government financial aid form that has to be completed in order for you to get a federal direct student loan or a parent to get a Parent Plus loan. Okay, that's the first thing that has to happen. You complete the FAFSA and you submit it. What will happen is that the colleges that you've been accepted to and develop your financial aid package will include the federal direct student loan as part of their offer. Okay. And again, $5,500, a max of $5,500 first year, 65, 75, and 75 for a total max of $27,000 that a student can borrow on their own without a parent co-signing for it through the federal government. What I also want you to know is that there is a need-based portion of that. If you do qualify for a subsidized student loan as part of that, let's say $5,500. That what can happen is that up to $3,500 of that can be subsidized. What does subsidized mean? And it is need-based, and you do have to qualify for it, which the school will identify for you. So a subsidized student loan means that the federal government will pay the interest on that loan for the duration that you're in college until 6 months out of college, and that's when interest will start accruing. So essentially, in a sense, it's like getting free money, right? You have to pay back the principal, but you don't have any interest accruing. Again, you have to qualify for that need-based, the subsidized portion of it. But as a whole, the $5,500, if you get the whole thing that is unsubsidized by the government, or a portion of it, which is $2,000, which is subsidized, interest will start to accrue as soon as you take the loan. Okay, and so that's important. That's important to note. It will accrue and eventually will compound over time at the interest rate that's designated. So the first step is filling out the FAFSA. Your accepted schools will then offer that as a part of your financial aid package, your financial package, and then you can decide whether you're going to take it or not. If you choose to take the federal direct student loan, you have to let the school know that. It's typically on the student portal, and you check off that you want to take it, and then they will apply it to your account. But that's not the end of it. So let's say you decide you want to take it. So the first year that you take it, whether you're first taking it as a freshman or you're first taking it as a sophomore, whatever it is, the first year that you take it, you have to complete entrance loan counseling online through the federal government. And what this is the federal government wants to be sure that the student who is taking out these student loans understands what it means to take out a loan, right? And what that means in the end, and the duration. And so federal loan entrance counseling has to be completed. It'll take about 45 minutes or so. There's a bunch of passages you read, there's questions you answer. It's not a test. If you don't get the question right, you'll go back and read it again and answer the question so you understand. You then, at the end of the entrance loan counseling, you will have passed, and then you have to go and sign your master promissory note. It's a promissory note to say, I will pay back this loan when the time comes. Very important. So the student takes it, no co-signing of the parent. A portion of it can be subsidized. For the 5,500, it's up to 3,500. For the 6,500, it's up to 4,500 can be subsidized. And for the 7,500 in junior and senior year, up to 5,500 can be subsidized. Again, that's need-based, but anybody can get the unsubsidized student loan. So that's the federal direct student loan, how that works, and that's how you are able to get it. The Parent Plus loan is a little bit different. You do have to complete the FAFSA. The parent will have what we call as an FSA ID, which is what you need to log into your FAFSA. A student needs one as well. And what will happen is in the April, May, June timeframe, before the student is heading off to college that fall, the parent will complete the Parent Plus loan application. And that is truly the parent to complete it. It's not a difficult application to complete. It asks for a series of information. They will look up your credit score, and it's a pretty relatively low threshold that your credit score has to be at a minimum in order to be approved for the federal Parent Plus loan. Again, a parent can borrow up to the cost of attendance. Certainly not something that I would advise, because then you're going to have a whole other mortgage on your hands. And the interest rate is slightly higher, usually a couple of percentage points higher than the student loan, the federal direct student loan. And so after you fill out the Parent Plus loan, you have to fill out that once you know the school you're going to attend. You don't put a series of schools on that. It's once you know the school you're going to attend, that's what's designated on the form. And after you do that and get approved, that will be sent to the school as well. And you can change that amount if you want to. You can borrow up to the balance. You can borrow a specific amount. But that's how the federal Parent Plus loan works. Plus loans also work for graduate students. Okay, so if graduate students, because you're no longer a dependent student once you get into graduate school, if they want to take a loan, they can, through the federal government, they can use the Plus loan application, and they can borrow up to the cost of attendance, which again is where I think a lot of people get into a lot of trouble with loans and take decades to pay them back if they're even able to do that. So that is how federal student loans and loans work for higher education. Liz Levine with Signature College Counseling, making your college admissions journey easier to navigate.